Alrighty, it is Friday, November 20th, 2020, 9:35 a.m. The market just opened. Let's look at the weekly chart. Okay, we see what's going on here. From 2200, we went to 3668. What I did was I created much more time to see what the market's been doing over time and to see a lot more data in terms of the averages. So anyways, this is what the weekly chart looks like. Okay, the daily chart, let's look at that. Okay, and again, I did the maximum data available so we can see a lot more of what's going on here. So here's the daily chart. Okay, where each of these is a day. It's no longer a year, but I'm actually going back, you see, as much as it can go. So anyways, whoops. So this is let's try that again. Hold on. This is the daily chart. Okay. And we see we're sitting just on this green fast line. Okay. Which, again, if we continue going above it, then that can be a bullish signal. If the green line starts to turn upwards, and if the green line and if the actual market stays above it, that could be pretty bullish. So that's the daily chart. Let's look at the hourly chart. Okay, also I went and I did a lot more time in there as well. So the hourly chart looks like this 3580 level is some resistance. We'll have to see it, and it's coming close to all the moving averages, so this could be very interesting. Now, one thing I want you guys to notice, yesterday, remember when we got, well, let me do that with the other averages. Okay, so hold on. Let me show you that with that. Okay, so the 30-minute right here. Okay, again, it may look bearish if it goes under 3570 or bullish if it goes above 3580. That's on the 30-minute. Let's look at the 15-minute. Okay, very important average to look at. So if we look at the 15-minute, again, 3570, important level. Let's look at the 10-minute. And it's taking more time to load because, again, I'm putting the maximum data. I'm putting 180 days of 10-minute candles. You see, so I'm doing like the maximum that it'll allow me to do. Okay, so here too, 3570, very crucial. 3580, very crucial. A break of either one would be important. And then we can do the 5-minute, and then we'll do the 1 minute after that. Again, I'm putting in a lot of data in there. It's taking time to load. Yeah, this 170 level is very crucial. Now, what I want you guys to notice is yesterday, remember we got stopped out here, right here at this up move. It was very zigzaggy, not going anywhere, very choppy. We had that down move, then choppy, nowhere, and then it went to the top of the range. And I said to you guys, I'm like, listen, we're probably getting out at the top, but we have to stay with our discipline and everything else and limit ourselves. So that's what happened. I mean, the market closed wherever it closed, but then later on, it went all the way back down to 35.45 and again stayed in this range. So it's very interesting how that occurred. So this is what the 5-minute looks like. Again, 35.70, very important level to break if we want to be comfortable with any shorts. Okay, and then let's see if we could find the 1 minute here. Again, I'm looking at a lot of different time frames here. I'm starting to put a lot more data in, and as we develop the hedge fund, that's going to be very important. So the 1 minute chart, we see 9 a.m. it went from 3570 to 3578, and after 3578 again. So a break under 3570. Okay, a break under 3570 would be bearish, and it looks like we're going to go short right here. So let's do that. Let's go short. 5. Final day of the week, and yeah, we've had some really nice comebacks last few days. Up until the last, yesterday we took a little bit of a hit. It was very choppy, but anyways, we're still going to be on track to hit the highs before this challenge is over. In our view, we do believe in our strategy. So here's the order. We are short 35, 72 and 3/4. Okay, that is our short price that we are short 5. Now in terms of the stop, we will put the stop at 35 83.5. Okay, that'll be our stop. Let's confirm that it's in 35.83.5, and that's the story. Okay, so all right, so we're in the market. That's what's going on right now. We are short, and we have a stop at 83.5, I believe, right? Yeah, 83.5. Okay, let's see where it takes us. Alrighty, Friday, November 20th, 2020, 9:54 a.m. So we are at 35.71. We're getting close to that 35.70 level. Now, guys, what I did, I have about 17 different time interval. Oh, we just broke 70. We're at 68.75, 68.5. But what I have is I've created, right now, I've organized my intervals for data to be able to see the maximum possible, patterns and trends and data over long periods of time for the market. And the reason I did this, one of the top traders on the planet, Jim Simons, right? He's like the best of the best of the best over since the 80s. He has like the best record, the best hedge fund. He gave people their money back years ago, and he's like just trading, family money. He got really good and huge. He's worth, I don't know, about like 15 billion, like whatever. He's a huge guy. I mean, you could look up the exact data numbers. I'm just speaking from memory, but in any case, he believes he takes terabytes of information and feeds it into the system to see what over time happens, even like days of the week and certain things happening here or there, and he just puts in data. So I believe data is the most important thing, and I do have a lot of years of experience, but and I know certain days have a tendency to go certain ways, and depending on a Monday, on a Friday, whatever, there's certain patterns, but it's very important to see what the market has done. So like, for example, right here, maximum year. So I have what the market has done since before 1990. Look at that. So it went from about $141.50, okay, back from 1985 to 3,568. So you could see each of the candles is a year. Or I could go and look at the weekly chart, okay, the maximum available, and then I could go look at the daily. And also, since there's more data, the averages are more precise, because all of my special averages that I have, my proprietary averages, the red, the blue, all these different colors, they're more accurate when there's much more data that we're looking at. I have a quarterly where each of these is a quarter. So anyways, very interesting. And then for the short-term charts, right now it's using 30 days, and it takes so much more time to load than what we had before, which was like 3-4 days. So it's like literally I can go and see for 30 days what the market did, every minute, okay? And I could see trends and what happened and test averages, and this will help a lot when we start doing algorithms and stuff. But in any case, what I'm getting at here is that on the 1 minute chart, there's a lot more data that's put into all of these averages. So you see right here, 35.74. That was a break of all the averages, and the market's starting to collapse. We're at 35.66.75 now, 35.66.5. So that's what we're looking at. So anyways, I'm putting a lot more data. I'm working hard to like I said, I know and I'm confident that we're going to be back on track. I mean, that's my belief, that we're going to be back on track to close out this challenge at the highs, of what we've been doing. Now, again, I don't know if the last day will be the highest we hit. Nobody knows. We could have some rough days, but the point is that I'm working maximally to really trade this challenge as if it would be real money, and to learn together with you guys. And I think 30 days is more than enough of a good feel of how we can trade. And then from that point, I'm looking to go live, start a company, start trading, build up a real track record that's audited. And then from that point, we're going to start getting investors and then building a huge fund. And I'm confident we're going to be a leading fund. I have a lot of years of experience. I've lost a lot of money. I used to be a broke. There's a lot of stuff I've been through. And to me, it's all of a school of learning and growing and progressing and being the best that I can be. And I apply that to everything I do in life, not only trading. I'm also a life coach. I'm building up, I'm going to be a leading life coach. We're building up a brand. I've been immersing with Tony Robbins and Jim Rohn and Earl Shoaff. And these are all Jim Rohn was a teacher that inspired and built up Tony Robbins at 17 years old. And Tony Robbins, he's amazing. He's the best of the best. But it's not like what he says is unique to him. He's the best at what he does right now, okay? Hopefully we'll change that. But he's the best at what he does. But the thing is, most of what he does is not unique. Yes, he's tested it over years and decades. He's been doing it over 43 years. But it's things that he's learned. NLP, he learned about NLP. He learned from Jim Rohn. He learned from the top guys. And if you go study them, you'll see that what he says is not necessarily unique to him, but it's just he takes what works. And he keeps immersing and growing and progressing. And that is the secret to life: appreciation, progress, and contribution. And you too can do the same. So that's what's going on right now. We're looking at the 5-minute chart. The market's at 35.69 3/4. It broke through all of the averages but the red, and now it's kind of bouncing above the red, trying to go to the blue line. So that's going to be important to see what it does there. Okay, so the market is rallying a little bit off of the 65, 66 price, and that's what's going on there. In terms of the 10-minute chart, see, it takes a long time to load. I have a lot of data in there now. Okay, it's literally sitting at support, and it's bouncing a little bit above the support level. It came close to the blue line, and now it went back up. Let's see if we can break this 35.70 level. Remember, I told you 35.70 is an important level, and don't forget, we're in this range from hell. It's been really you see, look at that. We got right here, you see that was here, you see this part, okay? If I'm not mistaken, hold on, what's the time on that? No, so we got stopped out, it was about 2, so we got stopped out about here, right there, you see? And then it went up to 35.80, and then boom, straight back down. So yeah, so it's let's see. I mean, the top of the range is around here. That's why we went short. 35.80 to be more precise, around 35.80. And we have gone already down to 35.65 or so. And now we're kind of going up a little bit. But I still feel that we, at the very least, we should go to the 35.45, 35.50 area, in my view. That's what we're aiming for. Now, if we're wrong and it breaks out, we have our stop at 83.5, and we will probably go long. We'll have to see if there's a solid breakout. But if there isn't a solid breakout, then again, we'd probably go short again, because that would be near the top of the area, and we're expecting it to just be in this area. And that's the point, you have to be very flexible with the markets and in life. And I believe that everything in life you can take out from the markets, everything. It's so interesting. When the markets were at their worst, that was the time to buy. In other words, when people were panicking and Corona was hitting and it was crazy and tragic, and we've all of us have been impacted, some of us much more than others. But you look at what had happened when Corona really hit hard, okay? What had happened, look at that. Okay, the market was at 2200, okay? You see it went and it had this steep sell-off from about 3400, went all the way down to right around there. So it's that like 2175 or 2170. Okay, if you want to get more precise, that's 2174. Okay, on March 23rd, that's what happened. Okay, and go back in history and see what was happening on March 23rd. But that was the bottom. If you went short then, oh my gosh, you'd be destroyed. And especially if you don't, if you would have went short and put a stop, at a good level, okay, maybe, But, if you went short at 3,400, great. But, if you would have went short here, hold on. It's a little tricky trying to do this on your phone. But that's how we keep it real. We trade right from our phone. We screen record it live, and then we post. Okay, so February 24th. Where is it? Whoops. Where is it? Hold on. So February 24th. Okay, whatever. My point is, it was about 3,200, and in a matter of a short time, it went all the way to this bottom, 2170, I believe we said, right? Right, 2174 on March 23rd. Yeah, March 23rd. And then that was the bottom. And if you went long at that bottom when things were at the worst and they were oversold and there was peak fear and newness, and there's still fear, and the media is fantastic at infusing massive doses of fear. And I'm not saying it's not risky, and I'm not saying, believe me, I've been hit, we've been all hit really hard, and many of us harder than you can imagine. But the point is that fear is probably the worst thing. I mean, psychology is everything when it comes to health, and constantly focusing on, oh my gosh, be afraid. That is so bad for your health. That is so unhealthy. And people can get sick just from worrying, So anyways, my point is, but if you went and you would have bought then, okay, look what the market did. It hit a high of 36.68. I mean, now it's a little bit lower, and we're going to see, and we're thinking that's to go to the bottom of this trend. But it's so important to understand that the markets are like life, and you need to use the markets to learn from and grow from and progress from, and don't take losses seriously. Meaning, take them seriously, obviously, and control them and minimize them. And that's the secret for life too. If you fail, if things don't go your way, if you're not doing what you're trying, don't beat yourself up. Use the past as a school to learn from, and not to beat yourself up. That's so very important. Anyways, we're under 3570 again. It's 10:06, so the market's been open for 36 minutes. The New York Stock Exchange, that is. And yeah, we're under the averages here. Let's see what happens. Alrighty. לעילוי נשמת אבי, בן ציון בן שבטנו. Alrighty, it is Friday, November 20th, 2020, 12:57 p.m. Here's what's going on. So we look at this 30-minute chart. Very interesting. And I love how we have 180 days now. So the moving averages are a lot more accurate in my view. And we have a lot more data to go on if we want to see how the 30-minute has acted over 180 days, where each of the candles is 30 minutes. I am expanding as much as possible to see the maximum number of data, because data is power, and the top trader on the planet uses tons of data, and I follow what he does, and I learn from the best. I mean, I believe success leaves clues, and whatever you want to do, you got to look at the people that are doing it, that are the best in whatever field you're at, and go and emulate that, build upon that, and make it better. But don't spend 10, 20, 30 years breaking your head and making big mistakes when someone else could have done that for you. Learn from that and then build upon that. And then the mistakes you'll make will be already with taking what you've learned. Anyways, so right now all the moving averages are coming together. You see? Well, not the red one. The red one's up there, and it's a little bit like curving and starting to trend down. You see, it was over here, it was kind of trending up a little bit, and now it's starting to trend down. So that's an interesting thing. That's an important average. But now you see the blue. All these other averages are coming together. You see that? So, my expectation when this happens, when all the averages come together, typically something can happen explosively. So, when all these averages are together, the market can either break above them and become bullish, which I don't know. I mean, I'm obviously short, so I'm expecting it to go lower. But the other part is it could start to explode down. And if the market goes under this 35.50 level solidly, we can have a nice little sell-off. But we will have to see. It's been a very choppy week. There's a lot of uncertainty. There's a lot of things. They're wondering about the stimulus. There's a lot of stuff going on. Anyways, so... and there may be further lockdowns all across globally, the U.S., different, states, and, and businesses are struggling, and they may struggle a lot more if they keep locking everything down. And yes, we want to be safe, we want to do the right thing, but we also don't want to destroy businesses. And in many countries, they've reopened, and they've been, and their incidences have either gone down, or at least the severity has gone down. So anyways, that is the story. So we're looking at the 30-minute here. We're looking at all the averages come together. Let's look at them for a moment at the 1 hour. Let's see if we have a similar situation as well. The 1 hour, kind of similar as well. But you look, it's a very choppy range between 35.50, 35.80. A little bit there's some outliers, a little bit under and above. But basically, the main trends we're looking at, the main range is 35.50 to 35.80. So a break of one or the other can have some intensification of movement. Now, in terms of the 15-minute, which is an important time frame which we haven't been using till now in this challenge, but I've used it forever. It's a very important one. Typically, we used to look at the daily chart, the 15-minute chart, and the 5-minute chart. Those would be like the three main charts when we used to trade, and I was at a firm on Wall Street. But anyways, so in terms of the 15-minute, we see a similar situation. The averages are coming together, which makes sense. I mean, it's kind of flattening out, so they're coming together, and then eventually they're going to go one way or another. The 10-minute, let's look at that one. Okay. Okay, here the averages have a little more space, but we are sitting right at resistance, and we have this red line that we need to break. But again, under 60, it's going to be under everything. Under 50, it'll be under all of them. So that's the 10-minute. Let's look at the 5-minute. The 5-minute, we're sitting right under resistance. And again, this red line has been support, so we'll have to see if it breaks above this resistance level or goes right back down. And they are sort of coming together. You see like that. You see slowly they're sloping down, the red line sloping up. All of these are and they're all starting to come together as well. And then finally, actually let's look at the 3-minute, which is another one we haven't been looking at, but for day trading can be pretty useful. Whoops, here we go. And then this one, let's see. So again, very choppy action last day or a few days. We're sitting at the resistance level, okay, right underneath. And again, we need to take out this 62 level, the 50 level, and that would be, once we take out the 62 level, then the next one would be the 50 level. But that's the 3-minute, okay. And then finally, let's look at the 1-minute. And here we go with the 1-minute. Okay, very choppy action, you see? 65 to 70, 65 to 70. So it's just been really tight between 71 and about 64 or so, give or take, for quite a while here. Again, we had some outliers higher and lower, but it's just been in this tight range. So let's get a break. I mean, obviously I want to break under 64, 62, and then under 50, but, you know, let's break out of this range. So let's see. Okay, and that's the 1 minute chart. So that's where we're at, ladies and gentlemen. We are up about $937. We're back at 152,625.90. We did get close this week, back almost to 160,000. We hit 159,871.30 on Wednesday, but then Thursday we took a big hit for over 8,100 after commissions, 8103.20. So that's the story. We'll see what we can do today, what we can get out of the market, and then next week we'll be working hard to like I said, to hit new heights. And that is the story. So okay, so we are here at 68, 35.68 and a quarter. All right, well, 35.68 now. Okay, let's see what happens. Alrighty, 3:33 p.m. Friday, November 20th, 2020, on a beautiful sunny day in New York City. So the market right now, as you see, is approaching 56. It's right now at 58. Let's look at the 5 minute. Okay, wow, you see that? It's heading down towards the lows of this move since the open. Let's look at the 30 minute. Okay, here it is. Okay, back. So you know what we're gonna do? We're gonna put in an order to, where are we? We're gonna put in an order to close out the position 5 at 33. We'll put 42. We may revise that in a few moments, but let's see where the market goes. So 33.42 even. That's going to be our limit order. Let's ensure that it's in. We got a working order. Whoops. No. Oh, we have 2 working orders. Here we go. 35.42. 35.42 is our working order. And let's see where the market goes. Right now it's at 35.58 and 3/4. All right. Alrighty, Friday, November 20th, 2020, 3:58 p.m. So we're at 35.56 right now. 56 and a half. We have 2 orders in. We have 1 order for 35.42 limit, and we have another order for 35.83 and a half. So we're going to cancel the stop at 83 and a half first, because that was a defensive stop. And now, in terms of this one, the 35.42, right now we're at 56. Let's see where the market is. We're at 56 and 3/4. So we're going to change that order. We're going to put it in to a market order. Yeah, we'll just do market. It's fine. Boom, and we are out. Okay, we are filled at 35.54 and 3/4. We are up 2.88% on the day. We're up 4,500 gross, and our equity is back at $156,233.70. And that's the story. Have an amazing weekend. Have a Shabbat Shalom, and I will see you guys Monday. Guys, something real quick. The market went to, let's see, it actually went to, I think, 42 or change. So we could have gotten filled. And yeah, we did have our limit there initially, but we just got out at the market, and we would have made so much more. Let's see, what is the high and low? Yeah, the low was 35.42 and 3/4 actually, so almost. All right, anyways, that's the story. Have a great weekend. See you guys Monday.